Dude, I bet we're just going to get a stiff breeze near where you don't have right near the heights there. No. I bet it's not going to be really good.
All right, it says we're on the air. Good afternoon, everyone. Just double check. Yep, we are. Great. Hey, welcome. Thank you, guys, for checking us out this afternoon. This is our COVID update, Monday, Wednesday, Friday. Hopefully you're all moving over to the YouTube platform. Appreciate that. What's up, Nate? Almost gave you a call today, Nate, because we were short one wizard tonight, but we canceled because of the storm. So
I guess your party's not that good. They
Yeah.
can even weather a little hurricane. We do need a wizard.
What's up, Bobby? Thank you very much for joining us, man. Appreciate it. All right, let's get going. Let me pay a few bills. Let me give you my warning. As always, this is not an offer of security. We're going to be talking about 506Bs and 506Cs. We're going to talk about joint tenants. We're going to be talking about second loans, which looks like we're getting a couple in here today. Talking about new syndications. Got some exciting stuff happening. But it's all for demonstration and education purposes only. I am not the solicitor for investors. There's a guy named Brian from our office, so you'll know you'll be solicited when you talk to Brian. So hopefully you're good on
We
that.
need to give you a title, Brian. Solicitor General or
Solicitor
something
General,
like
yeah.
that. Or something cool.
Yeah, so we need you guys to help us ring the bell. So if you haven't already gone over to YouTube, please do and subscribe to our YouTube channel, the Texas Real Estate Radio Network. We're about to start bombarding you guys with a bunch of emails. We'd rather not do that. We got only a few hundred left to go. Basically, when you get to 1,000 subscribers, you get access to more tools, and we really like those tools. So appreciate your help. If you're seeing this on Facebook, obviously go ahead and share that on Facebook. Very big deal for us. I'm talking about banner season. I'm going to be doing a banner season update on Friday. I'm going to do it right after the update, and we're going to talk about banner season, so I'll be sending out a blast on that. But here's the thing. What's the hardest thing to find in business, in our business, right? And the easiest thing to lose is clients. And for us, those are private lenders, right? I mean, we are working extremely hard to get investors and lenders into our sphere of influence. It's a reason why we're up at 5 in the morning and going to radio studios and all that other stuff to really do this. And so once you have them, right? Once you have them, the big issue is how quickly will you lose them? And the number one reason why private lenders and investors and clients in general do not come back is because of perceived indifference. You simply don't care. Well, banner season has really come up with a pretty clever little way to solve that issue. On Friday, I'm going to go over it. I'm going to share our touch list. And it's not hard. We have a VA that sets this stuff up for us. You can, if you come in underneath me, because it is an affiliate and network marketing, I'll give you my entire list. I don't care. And you can work with a VA that will help set these things up and send it out. It's pretty hands-off after just a little bit of understanding. And so if you're interested in this, text banner to 281-401-9008. And again, on Friday after 1 o'clock, we'll do a demonstration so you can kind of get a better understanding of what we're talking about. We do have a great opportunity around here. It is sorry, we have a fly. We do have a great opportunity around here, and it's EXP. And Jason and I have done a lot of things right. We've done a few things wrong. It's not all been perfect. We lost $60,000 on an apartment deal.
Yeah, that kind of sucked.
That really, really sucked. That was horrible.
What?
And then
We didn't even get to own it.
we didn't even get to own the damn thing, right? And so, and then shortly thereafter, we lost another $9,000 on another small apartment deal. So we took a $69,000 lesson on that.
That was my roadster down payment, just right down the toilet.
But those weren't regrets, right? Because we learned from it. We've learned how to write the contracts up better. We learned to really start working with a commercial broker, commercial agent, really sort of fixed a lot of things for us. However, I would say the one regret, the true regret we do have is 2 Decembers ago, we were making fun of Brant Phillips and Chris Bounds for EXP. And, we have mud on our face right now. We've eaten crow. This is something we should have did 18 months ago. Yep. We should have gone to EXP. We'd be sitting with $10,000 in residuals each month had we just done it the right way.
Probably for both of us.
Right? Yeah, easily. And so
a couple hundred G's in shares too.
Right.
You'd be doing okay.
Yeah, I mean Brant's got over $200,000 in EXP shares and he hasn't paid $1 for any of them.
Oh no, I did the math the other day. He's got 6,000 and it just broke $40 a share.
Wow, so 240,000.
No, that's 320.
6 times 4.
Oh, sorry, I thought he had 8.
No, $240,000.
$240,000.
And a $10,000 residual.
Yeah.
Damn.
Not bad.
So we got a little work to do. That was 2 years of Brant. We think we can probably match that in a little bit less time because we have the real estate center. And we have a thing we're calling Club 45. So we want you to come out and join Club 45. This is Thursday night. We're going to go over the presentation. Now, if you're in Oasis County, you're an active agent, we have a special deal for you. I will pay for your marketing for the first 6 months. We have lots of buyers that are ready to go. We'll probably be deploying about $100 million in Oasis County over the next 2 to 3 years. We need agents to help us do that. I'm not doing it. Jason's not doing it. The other high-end muckety bucks around here aren't doing it. We need agents to go do what they do. Get things under contract, write the contract the way we want them written, and close on deals and take a commission. So, I mean, realistically, there's $3 million worth of commissions, plus leases, plus disposition down there. So there's probably close to $4 million worth of leases we've got going out.
But that's probably no interest in anyone.
No interest in anyone else, right? Yeah. So, right, certainly not an agent who does 2 deals in Corpus, right? They're not interested in that. But it's solid work for the next 5 to 8 years. So, if you are interested in learning more, it is tomorrow night at 9 p.m. Hopefully the power will be on. And it's text 281-401-9008 for a little more information on Club 45, and I'll send you out the link. And again, I'm almost done here. If you do want to invest with us, Brian's a very busy man. We've got new syndications coming up, so if you have an existing relationship with us, you're a sophisticated investor, let's get that all rolling. We have our crowd fund, we have first position loans, and a lot of stuff, and we got something really sexy happening next week. We're going to put that out to existing investors first, but we have a really sexy Mr. Texas Real Estate Investment platform that we'll be releasing in about 10 days here. So reach out to Brian, 281-401-9008. All right, Jason, I'm going to save that. You can
All right, turn my mic on.
Yep, you should be good.
Is your mic off?
Mm-hmm.
Okay, good. All right, I'll give you guys a little tropical storm Laura, or hurricane, almost Cat 4 Hurricane Laura update. And this is really for the folks that are not in Texas. If you're here in Houston, you're probably watching this by the minute. I think our next update's around 2 o'clock. But this looks like the path, the most likely path. I don't know why they call it the cone of uncertainty. I kind of joke in our market. I do a marketing class. I call it the cone of certainty. Like this is my target market here. So the black line there is the median, if you will, for the track, the storm track, and then the blue, which is kind of funny because it comes in from the ocean. I don't know why they make that blue. Probably make it yellow or something. But anyway, that's the most likely track. It looks like it's going to land somewhere in Louisiana and just kind of rip up the border there. So what's that going to mean for Houston? I think we're going to get a little storm surge, and it's probably going to be windy. Mm-hmm. Like 20, 30 mile an hour winds, maybe if you're in downtown Houston area. If you're like Rob, you live in Cypress, I imagine we're going to be like a regular day. Like it's not going to be that big a deal, but we'll see.
But it's hitting overnight, right?
Yeah, it starts tonight in through Thursday morning. Very interesting. This is going to be a crazy, crazy wind event. They're predicting winds up to 145 miles an hour once it hits landfall, or once it makes landfall. Just note here, they really don't expect any. This is not going to be a rain event. Like they're talking about maybe 1 inch west of I-45. Like no rain at all. We get more than that. We can get an afternoon storm here in Houston. It drops 10 inches of rain. Right. So it's not really that big a deal. And our bayous are real low. The city is real dry right now. So we've got plenty of capacity for rainfall. So for the guys that have got portfolios in Beaumont, might be kind of a sleepless night tonight. Yeah. I might wake up a little bit of damage there in the morning. But and the folks at Port Arthur, we're actually looking at a deal in Port Arthur right now, which is right over here. And this is going to be tough. This right here, you're going to get, as closer you get to the coast, it's going to be pretty windy. So that's your little update there. All right, I may spend the next 30 minutes. I may just talk about this article today. This guy, this is your boy, by the way, Logan. Whenever you see those pictures, you're like, I don't like this guy. And I'm like, what? His analysis is spot on. Yeah. And I'm just going to go over some of this. In fact, I'm so tempted just to read the whole thing to you guys, just to be completely honest with you, because it's so good. This is existing home sales. Gray areas are recessions, these gray bars here. Blue is number of existing homes sold. This really should be a bar chart, but that's okay. We'll get into semantics later. It starts in 1999. This is 2021. So you can see here, obviously we went through a recession, but our existing home sales are back up again. And he talks about why. For the casual observers of the market, it may seem intuitive that with all the economic chaos we suffered through the first half of 2020, the housing market would take a drastic hit. However, that's not the case because most people do not understand the two main drivers in housing, demographics and mortgage rates. He goes on to say that 2020 through 2024 is going to be the best demographic environment for housing in American history, meaning more people that can afford homes. That's really what that means. We also have record low mortgage rates. He also says in here that we really only need to have about 4 million loans a year to maintain the current pace that we're at. So we don't need as rapid of sales as we've had, but about 4 million new mortgages every year will keep the market afloat. However, he does say something pretty interesting here. 15 to 20% of the marketplace are cash buyers. So if we even got rid of all the cash buyers and we had about 4 million closes a year with mortgages, the market is still going to continue its price acceleration. In other words, the market's going to be relatively buoyant beyond that 4 million mark. As long as we're doing as long as 4 million people out of 133 million working people are buying houses, this market is not going to stop. It's just not. It's an absolute madman. It's just a machine. Juggernaut. Oh, I like that. Juggernaut. I'd highly recommend reading this article. I won't go through the whole thing, like I said, but I will tell you this, and he's absolutely right. He says this at the bottom. If you're one that believes in economic models instead of conspiracy theories, keep following this page. And I think he's absolutely right because the garbage I'm seeing on Facebook makes absolutely no sense. When you start to dig into the data, there's no bubble. I mean, he talks about this here. The rate of growth in no way compares to what we had during the bubble years of 02 to 05. Second, we don't have a consumer credit bubble in housing. You guys tried to get a loan lately? It's a nightmare, isn't it? Even if you got lots of money, you got good credit and a good job, it's a total pain in the ass. So it's not like 02 to 05 where if you could fog a mirror, you got a loan. So the reality is that the only thing that's going to stop this market is too rapid price inflation. So, and we're going to talk a little about inflation here in a minute. I just looked up a house I bought right after Hurricane Harvey, which is what, 3 years now?
Yep.
So that house appreciated. That it was worth about $140,000 that year. I just looked it up. It's now worth about $200,000. So it made $60,000 in appreciation in less than 3 years. That's not a bad deal. Now, we bought it right after Hurricane Harvey. We're all in, rehabbed and everything at $108,000.
That's 40% over 3 years. That's about 13% a year.
Yeah, 13% a year. That's how you get rich in real estate.
Wow, that's amazing.
13% a year. So now what's cool is that 13%, now that 13% is on $200,000, right?
Mm-hmm.
So it's going to start to appreciate about $25,000 a year. Kind of crazy when you think about it. So that's how you build a lot of wealth. The joke is, hey, you want to make $1 million in real estate? Buy 10 single-family houses and sit on them for 5 years. And you'll be cashing out at $100,000 a pop. There you go. There's your $1 million. It's not that difficult. So in any case, read that article. It's excellent. Home price gains shrug off COVID concerns. This market is just not stopping. The 10-city composite index, by the way, Houston is not in Case-Shiller. So Houston's not in the 10 or the 20-city composite, but Dallas-Fort Worth is. So there is some Texas data in here. Annual increase came in at 3%, and the annual increase for the 10-city or the 20-city came in at 3.5%, which is crazy considering that, we had houses just flat out weren't selling in the middle of the coronavirus. Phoenix, Seattle, and Tampa still led the nation in price gains. Phoenix is up 9%, along with Seattle and Tampa at 6.5 and 5.9. So just absolutely insane how rapid this market's moving. And rates are still crazy low. Look at this, 3.09 for a 30-year fixed rate. 15 years, 2.6. It's just bananas. FHA is down to 2.3. Just absolutely insane. It really is. The Fed. So the Fed is meeting this week. The FOMC, the Federal Open Markets Committee, is meeting this week. They were supposed to go to Jackson Hole, but they're all a bunch of old dudes, and so they don't want to get COVID, right? So they're all meeting like on a giant Zoom call. How funny is that, right? Can you imagine? You got all the Fed guys on there, and they're on a Zoom call. Like that is like the most important Zoom call on the planet right now. Like there's nothing else more powerful going on in the world. But the Fed governors meeting.
You don't want that one hacked.
Yeah, you don't want that one hacked. Yeah, that one shouldn't be hacked, right? So they're trying to figure out how to manage inflation, which is hilarious. So this is what it tells me. You can argue on Facebook about abolishing the Fed, auditing the Fort Knox. You get all that right-wing conspiracy nonsense. But here's the reality. Inflation is coming. They are talking openly now. How do we control rapid inflation? The only way to pay back the debt is with less expensive dollars. Probably the best way to put it. You'll hear this term from time to time, inflate away the debt. That's essentially what they're doing. It's the only way to pay these guys back. I would not want to be a debtor let me put it this way. I would never lend anybody my money for 30 years at 2.5%. Like that's crazy. You've got no protection to inflation, which is why the federal government's involved in 30-year fixed rate, 15 and 30-year fixed rate mortgages. So here's actually they're calling this the 2% core PCE price level at the zero bound level. It's the idea that they're going to actually be able to maintain 2% price inflation or 2% inflation or greater is just absolutely absurd. And we can go through and see, there's a couple more articles I have in here that talk about this. But the idea that keeping price inflation expectations around 2% for the next 30 years is ridiculous. So let me just sum all this up in English that makes sense. Buy real estate. You're going to need to buy, for those of you who have some appreciable amount of wealth, you got a little bit of money, you're going to need to convert that cash into something that appreciates as soon as humanly possible. Your dollars are becoming worth less every single day. In fact, Brian and I were chatting this morning. One of the big draws for our fund and our syndications and any of our real estate deals is the fact that they actually cash flow. Like you have got to really start watching your cash flow. It's great that these things make 17, 18% a year, and you might get paid out 5 years from now, but I want that cash flow today. Absolutely want it today.
Well, that's what we're going to be talking about at 1 o'clock. Passive investor Zoom call.
Yeah, so 1 o'clock. If you guys have reached out to Brian, you should have gotten an email for the passive investor call. It is on Zoom. It's one of the few that we actually do on Zoom.
We don't go public with it.
We don't go public with it. We're following. I'm following Powell.
Mm-hmm.
We're following Chairman Powell there. Once he gets done with the FOMC update, then we'll jump in and do our passive investor one. But if you guys are interested in being in that call, you do need to contact Brian, and we can get you a link to that. Portland businesses leave due to lawlessness endorsed by the mayor. What's funny is these businesses are pulling out of Portland, but they're not saying it's BLM. They're like, no. It has nothing to do with BLM or Antifa. It's all this lawlessness in downtown Portland. I'm like, So guys are checking out. Goodman said companies include Daimler Trucks North America, Airbnb, Banana Republic, Microsoft, Saucebox, and Google, which have about 90,000 square feet, are looking to move. The list goes on and on. If you know a retail or office broker, give them a call and ask them how many clients they have that are trying to leave. So they're just going to move out of downtown Portland. They like Portland. They're going to stay there. But essentially, folks are getting out as fast as humanly possible.
It's happened before.
Yeah, this has all happened before, right?
This is the 70s, right?
Yep. Rob, Travel Club. Look at this one.
Nice.
As predicted, Miami is burning along with Vegas.
Wow. Let's look at Fort Lauderdale.
Pull up Fort Lauderdale. There's too much product. Miami has 30 months of unsold condos after COVID ravages its economy. And that's before they start doing foreclosures there. Now, I believe the real estate market as a whole is extremely strong, but Vegas and Miami have got a giant bullseye on them because of international travel and conferences and that sort of thing. So I believe this number may well double. It just in 12 to 18 months, wouldn't surprise me if this number doubled to 60 months. Essentially 5 years worth of inventory, which is crazy because they've got all that construction down there. Plus they've got people losing their condos. There's no jobs. A lot of the jobs are conference and travel related. So it's just going to be awful.
Wow. We're down to 135, Jason.
Oh, on that one in Fort Lauderdale?
Right on the little hook there. Yeah, on the inlet.
The market now has a glut of 30 months worth of unsold condos and 100 months worth of luxury units, which are $1 million and above. 100 months of inventory at $1 million and above. Nuts. This is what I like to see. Condo data is based 711 sales that close in the first 6 months, which averages out to about 120 a month. As of this week, there are still 3,600 condos in Miami. The average listing price is $758, which contrasts sharply with the average closing price of $511. That is insane. This is what a shrinking market looks like. This is what a crash looks like.
Yeah.
It is going to suck for these guys. It really is. So just an absolute look at these. Boy, these are beautiful. Absolute bloodbath. This is giving me flashbacks to 12 years ago of 2007. Yes, you're absolutely right. The day of the all-cash buyers coming and coming quickly. Those all-cash buyers are not looking to pay market value. They're not even looking for a discount. They're looking for a haircut. I wouldn't even call it a haircut. We're looking for a decapitation. Like we want to steal these things, right?
Yes.
I'll take $1 million condo for $300,000.
We're mopping up the blood.
Yeah, that's right. Yeah. Yeah, we're chasing the body parts. I mean, it's just going to be, they're just going to get obliterated, like chopped in half. So, sorry for the analogies. We were supposed to do D&D tonight, but since the storm's coming.
Yeah, so there'll be no orc blood.
There's no orc blood. Yeah. People aren't getting cleaved.
Yeah.
All right. This is another article again on the average inflation targeting, which really means rates will be on hold for about 42 years. Based off of a whole lot of math that these guys put together, they essentially figured out and said, hey, look, in order for the rate of inflation to meet the target of the Federal Reserve, that means that rates are going to be somewhere consistent within, a couple of hundred bips for the next 42 years. So the idea that, oh, Jason, rates are coming up, the price of real estate is going to come down, there's going to be a big crash, we're going to be back to, I always hear the guy, I'm 42 years old, and I always hear the older guys, they're in their 60s, are like, Jason, I remember when I bought my first house. and the rate was 19%, and we were happy to pay it. And I was like, all right, I got you, Grandpa. But I'm like, okay, well, that hasn't happened in 42 years. I don't think it's going to happen anytime soon. So we'll see. In fact, here's something very interesting. This is why I actually put this together. Equities outperform profits. So the asset prices of these equities are outperforming the real economy. It's very interesting, which it's so much easier to put all your money into the S&P, which is what you're seeing with some of these Robinhood investors and that sort of thing, than it is to deploy capital to build houses and U.S. wages and all that. So asset prices are outstripping the real economy. Does that mean there's going to be a crash in the stock market? Who knows? I don't think so. I think there's so much damn money out there that it doesn't really matter.
There's no place for it to go.
Yeah, where else does the money go, right? The money's got to go.
Us.
Yeah, Mr. Texas.
Call Brian.
Call Brian immediately. Chairman Powell, if you are listening to this broadcast, we only need $1 billion. That's it. Just shave off a bill for me, man. You printed $13 trillion. Can you just throw a bill this guy's way?
We need $250 million so we can leverage it.
Yeah, that's true. Mm-hmm. But a bill, if I'm going to ask big, right?
Yeah.
So
you'll settle on it.
I'll settle on it. Yeah, exactly. This article here has the most important chart in real estate. Let me go back here. Oh, you hear my laptop's about to explode. New home sales surge in July, highest annual spike since 1996. So new home sales are just off the charts. Why? Because nobody wants to live in the urban, let's just call it what they are, the urban hellholes that these cities have been turned into. But this is the most important chart in real estate. It's going to take the public news media to catch on. We'll start seeing this about 5 years from now. But let me explain this if you guys have not seen this before. The green is median new home sales price. That's that green line. The red is total new home sales in thousands. Starting in 2005, we had an absolute collapse in new home housing. And the problem is, we're going to begin to see, and you can kind of see it here, this line has more slope on it than this line, meaning prices are going to continue to increase, and they're going to increase faster. Why? Because we can no longer build affordable homes anymore. There was an article, I haven't talked about it on the broadcast here, but I posted on my Facebook page. Lumber prices alone have made new houses on average $16,000 more expensive. Lumber has doubled in price. And the comments in that article were fascinating. Well, you guys all boarded your homes up, right? Or you were supposed to. I didn't board my home up. But what does a sheet of plywood cost now? $25, $30 or something crazy?
Maybe about $30, yeah.
Yeah, about $30 for a sheet of plywood. So that's causing everything to become more expensive. And we just can't make affordable homes anymore. So this is the real story of the decade. This will be the real story about the next real estate crisis. And I'll tell you, the next real estate crisis is not a crash. It's a lack of affordable housing. And I think you're going to see, depending on who gets elected, the government get involved in a huge way. Huge. That's jumbo loan stuff I was looking at. This is, I won't go over this, but there's a coalition of housing organizations that are trying to protect renters and property owners. I think the easiest way to do that is just allow us to start evicting people. Because at this point, I mean, I don't know. We went out last night. How many people were at the bar last night? It was me and you and like a table of girls on one end of the bar, and that was it. And that place, we were at Poor Behavior, and that place usually has a couple hundred there, right? It's usually pretty busy. And then we went out afterwards. It was the same story. Every place, it's like there's like 5 or 6 of us downtown. We were in Midtown last night, and there's just nobody there. It's crazy. So in any case, guys, that's all I got. Rob, do you want me to send that back over to you? You're good?
Yeah. 1 o'clock.
1 o'clock. We'll see you guys for the passive investor, what do we call that? Webinar?
Yeah, it's passive investor call. Yeah, so I'm looking at down to $135,000.
135 grand and what?
For that condo pretty near the beach.
Oh, yeah.
And there's no pictures, but it's on the 5th floor.
I think we start picking them
Just
up when
got
they're
listed.
70.
Just got listed. Well, I'll be happy if they get to like a 125.
Yeah.
So that's the low end. They're still same size, higher floor, 185. But yeah, I think Travel Club.
Hey, if anybody gets
Come
a lead,
October, we're good.
if anybody gets a lead on one in Porsche Tower at Sunny Isle, I am all for that. I would love to live in Porsche Tower. You see that, Brian?
No.
You pull your car in. It's got a lift and it takes you up to your suite. Yeah.
Mhm.
And then the car, you have a garage that's all glass that you can see in from your condo. It's pretty awesome. It's pretty awesome for guys that like the cars at the house. So pretty cool.
All right, guys. See you at 1 o'clock. Thanks.